I'm delighted to welcome Owen Bassett, UK Risk Manager of Atradius, to discuss the key events and observations from 2023, and more importantly, what we can expect as we enter 2024. I represent Xenia Broking, and they were 1,400 credit insurance and surety clients who are based across the UK and operate in various industry sectors. Today I'll be asking Owen questions covering areas that are of most concern to those clients. Thanks for joining me, Owen.
No problem, Matt.
Owen, on the back of a low growth environment, has Atradius found it difficult to support clients enter new markets and their credit limit requirements?
Yeah, so I mean, we've become used to a low growth economy for the past 15 years or so now, and we would like to think that Atradius's risk appetite has maintained a good level of stability through that period. Undoubtedly, low growth and the prospects for that continuing into the new year cause us to have to pause when we're making our risk decisions. But there are many businesses out there, despite the macro position looking potentially weak, who are growing very strongly and at record rates. And it's our job as the underwriter to identify those individual companies that are prospering and support the trade that's going into that. I'm sure a lot of your clients are probably experiencing strong growth at the moment as well.
Definitely. Predicting turnover in inflationary times is very difficult. What observations have you had and what difficulties have you had with such inflationary pressure?
Well, I would say in general terms, most of our clients have eventually declared higher levels of turnover than they would have been anticipating through 2021 and 2022 and continuing into 23. And that has all been driven by inflation. I think what it causes in terms of the greatest challenge is how do you forecast how it's going to look for the future period into 24, because as inflation begins to dissipate and we're looking at single digit inflation now, what does that mean for an individual's own companies of prospect for growth in turnover? Clearly it has its impact in the pricing of the policy, because if those turnover expectations are particularly off, as has been seen in a number of cases over the past couple of years, that can have implications that kind of add an added complication to the workings of the policy.
And then just turning to insolvencies, which have been low due to the pandemic, as everybody's aware of. We have seen some quite high profile failures this year. Were they expected? Did they come out the blue? And are you seeing it just in relation to the construction sector at the moment?
So construction is undoubtedly the primary area of concern for us. In terms of the claims payments that we've made to our customers this year, it represents in terms of value around 50% of that, which, when you bear in mind construction in terms of its proportion of our exposure, is only around 10 to 12%. That shows how overweight its claims payments are and therefore how difficult it is in that trade sector. Large high profile names like Buckingham and Henry Construction that have failed in that time have really pushed up our claims position significantly beyond what we've seen in previous years. What that comes down to is the normalisation that we're seeing in the insolvency position. So COVID and the government support that was put out there to support businesses really falsified the insolvency position. But now we've accelerated out of that, and we're now seeing insolvency levels that you can compare with times like 2009, which were some of the most difficult times that any of us will have seen. As we look into 2024, we would forecast currently that the insolvency position will begin to stabilise at some point during that period at these high levels and remain at those high levels. I think the big question for us is there's an assumption that construction will continue to be hugely challenging through that period. The question is, how do some of the other trade sectors fare in that time? Because if we would see the insolvency position deteriorate in sectors like retail and food and agriculture, then you will begin to see an environment where claims are almost out of control.